Yes, sure. So we'll start with the new chapter called reporting. Yes, so what was our journey? So in the journey, we started from the SQC, then we had planned, we had knew the general principles, we had did the audit, and then we considered the evidence, we did the completion and review, and now the time has come for preparing the report. So in the meantime, we had seen already how our other persons work, like internal auditor, your branch auditor, your expert, how it is going to impact. We have learned all these things. So we are in the last series now, which is 700 series. At the intermediate level also this has been discussed. But please understand, at the final level this is very important because they may ask you to draft the reports. And if you have seen just previous chapter, majority of the questions were revolving around going concern. And what they were asking primarily about reporting part. Like how do you report the going concern related issues? So reporting is very important. Let us understand. And what I find that your CA final study material when it comes to reporting is much better than what you have seen in the inter. It's the same content. Okay, certain things are extra, 720, 710 and all are extra. But the first part is almost similar. Okay, it is very simple. We can quickly go through. And let us see some sort of illustrations, but let us try to understand again. Now, after studying this requirement, reporting requirement of different types of unmodified and modified audit reports, identify the different aspects of reporting also, and determine, apply the knowledge of reporting for professional practice. Okay. Now, audit report meaning types of reports, elements, and audit formats. Now, CAA got an invitation to attend seminar, and in the context of SA 700 series organized by ICI, so one of the learned speaker underlined the need for expression of appropriate opinion in accordance with the 705, and such must be expressed by the auditor clearly explaining the basis for such opinion. So it was also made loud and clear that auditor should try to challenge the matters as such as key underlying assumptions. Now it was also tried to explain the context of going concern assumption also. Okay, little thing they have told here. Auditor should go out to see that it is used, that its use is appropriate in the preparation of financial statement. If the client has not made its assessment, he should quiz the management. Okay, in the previous section only we have seen this. Now, if the going concerns accounting is inappropriate, then adverse opinion has to be given. Now, accentuating the value of emphasis of matter, other matter paragraph. Okay, so this also was discussed. One of the fundamental requirement of using such para is such paragraph cannot be used in respect of matter which modification of required. That means if something has been modified, the order of importance goes like this. First is your opinion, going concern, key audit matter, emphasis of matter, other matter. So then comes the key audit matter 701. Okay, so we are all going to see from SA 700 to 720. Introduction. Okay, we'll start with this. So assuming you are an auditor and you have concluded the audit field work, what is that? 330, and you have concluded 450. So your next step is to issue the audit report. So it is the most important deliverable because this is the FG now, finished goods. By expressing an opinion, he takes the great responsibility. Like, what is opinion, students? So we have come across this word. What is opinion? Because auditor is supposed to express an opinion. Now, opinion is nothing but a belief. Then one more question comes, what is belief? Belief is something you assume or you have developed a conviction that it must be true or fact. So you perceive the reality and you believe or you develop one feeling that it must be fact. It must be the truth. Now one question comes, how do you develop the belief? How belief gets developed in you? See, there are only two ways in which you form beliefs. One of the way you form the belief is you get input information through your five senses. You develop an experience. You have certain emotions. Now all the three elements, okay, they start to interact with each other. Okay, very somehow magic happens in the brain, and the output is you perceive certain words. Okay, that is your perception. Because the one model gets created in your brain. You feel that, okay, this must be the reality. You remember one of the thing I told you, there is a forest. We take different set of people. Biologists will see the, what is that called? He will see the diversity in the species. Environmentalist will see how much timber has been cut. Businessman will see how much timber he can convert. Real estate owner will see the plain land. See, each person looks and perceives it in a different ways. So what is that perception you have got about the reality? That is your belief. Alternatively, how do you form another way of believing? By constant hearing. So if you constantly hear something, somebody is telling, like advertisement, you see, you start developing a belief. Oh, this product must be good. So what is that I should be doing? See, when you go to an auditor, you go as an auditor to the field, you know, among 7 audit procedures, which is that procedure you always perform at the maximum time? I can say 70% of the time, it is inquiry. And when you perform an inquiry, you get a response, you hear something. That's why, students, inquiry, simply because you have heard it, it cannot become the truth, no? That's why inquiry is considered to be the one which gives the least reliable evidence. That's why when you do the test of controls or when you do any other procedures, it is always told you have to perform test of controls, inquiry plus other audit procedures. Because you cannot solely rely on the inquiry, because what inquiry will do, it will create one belief in your brain. No, you need, because you should not be biased. That's why we learn. Okay, you should not be biased, you should be objective, you should have the professional thinking, okay, you should reason. So ultimately your opinion, your belief should be based on information what you gather, experience what you have, and the meanings what you attach to those in that context. Then once the belief is formed, that you express that belief in the form of an opinion. Please apply this in our day-to-day life. You see how true it is. So whatever opinion we are expressing, it's all fundamentally they are our beliefs. Okay. So now auditors report on the financial statement. So they have told 700 series talks about the reporting, forming of the opinion and form of the opinion. See, both are two different things. Form of the opinion means content of the opinion. Form means format, structure, wordings. Forming of opinion, and generally form of the opinion is discussed at the beginning of the audit. You remember SA 260, where at the beginning only you have to communicate to the management and TCWG, like in which format you want the report, because your effort will go accordingly. Forming of the opinion happens at the end. In the forming an opinion, you form a belief based on the conclusions, and conclusions are formed after evaluating the evidences. And evidence is nothing but an information to you. So it deals with the clean opinion. Then SA 701 is there, which is going to talk about the key audit matters. Then SA 705 talks about 3 types of modified opinion. 706 emphasis and other matter paragraphs. Okay, we will see one by one. So first SA 700, forming an opinion and reporting on the financial statement. So you have to, if you have to report is like one report, a statement of information. So you are giving some information to someone who is that intended user. What information is you giving? In that you are expressing your opinion in a written form. In order to express the opinion, you need to form an opinion. How do you form an opinion? That's the question. And how do you express that opinion? How do you communicate something? What is your opinion? That's what we are going to see here. It deals with the auditor's responsibility to form an opinion on the financial statement. Also deals with the form and content. See, please, both are different. Form means the wordings. Forming an opinion means you develop a belief. So to form the opinion and express that opinion through a written report. That's why it's a forming an opinion and reporting. So SA 700 applies to which type of financial statement? It applies to complete set of general purpose financial statement. See, later we will discuss, students, SA 800 series and all will start with the special purpose framework. I'll just give an example. What is this? What we are trying to talk. See, primarily, what is the reporting framework? Framework means the frame. So anything you are supposed to do should be within this. So this is called a reporting framework. So what is the reporting? What you are going to report? You are going to report the finance, monetary information, because money is very important. Because that money, what you are going to report, it is not your money, somebody's money. So financial reporting framework will tell you how to report, how to recognize, okay, how to measure, how to present, how to disclose. What I can say that primarily 4 areas: recognition, measurement, presentation, disclosure. This is what it is going to tell. You see, your Companies Act, financial reporting framework, it told how to present. Did it tell you how to recognize, measure and all? Disclosure it has told. So sometimes know what happens, students. See, this is a very important activity, like designing the principles of recognition, measurement. That's why what the financial reporting framework will do, they will give always refer to financial reporting standards. See, both are different. Now, who will form the standards? So there will be certain institutions who are specialized in it. Like for example, ICA. ICA has specialized from 1949 in developing the accounting standards. What accounting standards primarily talk about? They talk about recognition, measurement, presentation, disclosure. So since Companies Act cannot develop its own standards, they bring one of the section and say refer, okay, follow ICA standards. So these are called financial reporting standards. Okay? And financial reporting framework is the Companies Act. Now, what type of financial statements you prepare? Primarily, you may prepare complete set or single financial statement. What does your complete set includes? Complete set includes, see, go and see in the schedule 3, no? They say balance sheet, because it should tell you the statement of position, financial position, P&L, cash flow statement, notes to accounts, statement of equity. This forms complete set. Now, what is single financial statement? Only balance sheet I will prepare, or only P&L I will prepare, or I may prepare, or it's also called an element, or I can prepare only FA register, fixed asset report, or I can have only debtors report. These are all called a single. So at any one point of time, either it will be, what you are auditing will be either complete or single. It cannot be both together. Remember, I hope you are clear. Either it will be a complete set or it will be a single set. It cannot be both at the same point in time. Then we have got something called general purpose financial statement, special purpose financial statement. Now what is general? See, general purpose, general public. That means this financial statement is prepared for use by, I can say, 7 set of people, like investors, primary users, then bankers, creditors, you have got employees, government, general public. Okay, so these are all the people who are going to use them. That's why they are called a general purpose financial statement. Now, this auditor has to be very careful while fixing the materiality, because see, each person may have a different types of materiality. That's why we have got 3 elements called overall materiality, specific materiality, performance materiality. So this specific materiality comes, okay, if we know that, okay, government is focused on this particular element. That's why specific materiality comes into picture. Now, what is special purpose framework? See, under special purpose framework, the financial statement is specifically prepared for one particular set of users. It's not meant for many people. So auditor know exactly who is going to use this. So for me, materiality is very easy job. I know now, because I have to keep only this persons in mind. But there are chances this could have been used by somebody else also. That's why we will see that how to address this in SA 800. For timing, we'll forget it. But what I'm trying to tell you, any financial statement will be either general purpose or special purpose. It cannot be both. Both are mutually exclusive. Then there is another concept called fair presentation framework, compliance framework. Now, what is the concept of a fair presentation framework? In a fair presentation, see, what is fair? See, fair, what is fair? Fair is fair, no? Be fair. What is this? This is unfair. What exactly you mean to say by the word fair? For your information, students, there is no definition of fair. Now, fair is something sits above truth. Okay, please keep this in mind. Okay, I'll give one small example. You must have been knowing about Mahabharata, that Ashwatthama's case. Drona had to be killed. Okay, the elephant they rename as Ashwatthama. Krishna makes a plan that Bhima is going to kill Ashwatthama. He knows that Drona doesn't trust anyone. He trusts only auditor. Who is that? Yudhishthira. So he comes to Yudhishthira and asks. Krishna has told Yudhishthira, but Yudhishthira says, no, I'm going to tell the truth. Now, you see, students, what happened? Drona comes and asks Yudhishthira, did Ashwatthama die? Okay. Then Yudhishthira says, Ashwatthama is dead. See the first sentence. And the second sentence he says, I don't know whether it is your son or an elephant. Now, the moment he complete the first sentence, Krishna starts blowing his shank. So what he tells second, Drona doesn't hear. So since he told Ashwatthama is dead, Drona believes because he got an information. His emotion came into picture. His experiences came into picture. Somewhere he started to believe and formed an opinion that Ashwatthama is dead. So there is no more point in living, and in rest of the thing you must be aware. And when this incident happened, till that time his chariot was above the ground, it seems. For the first time it came on the ground because it was not fair. Everybody knows that it is not fair. Okay, if Ashwatthama was not killed, he should have told. Okay, so what is fair? Fairness is something acceptable, reasonable. So you should be able to accept in that context. So if I talk about this triangle truth is here, fairness here. So who defines the truth? The accounting standards. Who defines the fairness? Your experience and the judgments. Okay, so now what is a fair presentation framework? See, if you have to prepare any financial statement, there should be one reporting framework. Companies Act would have told you prepare like this. Okay, at home, you will follow the instruction of your parents. Now my question to you, whenever your parents gives any instructions, okay, considering the circumstance, can you do something more or can you depart from what they have told? If the answer is yes, that means it is fair. It means you have applied your judgment because you saw your parents told something. Okay, like for example, they said don't open the door. You saw that okay, your friend is there outside. Literally, as per the words of your parents, you should not open the door. But at that moment, you bring your emotions, you bring your judgments, and you say, look, Baba, already is raining. My friend has become wet there. He is there standing, but my father has told not to do it. So in an exceptional circumstance, you depart from the instruction what is given because you feel it is not acceptable. So if you can depart or if you can do something additional, that is called a fair presentation. If you are simply going to comply, like for example, form number 3CD has got 44 clauses. If you wish, can you give 45 clauses? Or can you reduce and report only 43 clauses? No. So I can say form number 3CD is more like a compliance. You have, if they told this, you have to do it. So at any point of time, any financial reporting framework will be either fair reporting framework or compliance framework. So there is one matrix I can show you, students. It will be something like this. So you will have complete set or single financial statement, general purpose statement, special purpose statement, compliance fair presentation framework, compliance framework. So only thing, these two things cannot be together, but I can have any combination. That means I can have a complete set under fair presentation for a special single purpose financial statement under fair presentation, or I can have complete set under general purpose statement under compliance framework, or complete set general purpose framework fair presentation. I can have any combination. I can have single financial statement under for general purpose under compliance framework. So at any point of time, there are three characteristics to the financial statement. Either it will be complete set or single financial, Either it will be general purpose or special purpose, or either it will be compliance or the fair presentation framework. So there should be three. So which standard, this particular standard applies to whom? It applies to complete set, not single set. So single set, what happens? Okay, we will see that later. General purpose financial statements written in that context. The requirements of this essay are aimed in addressing the appropriate balance between need for consistency and comparability. See, this is big problem. First of all, you need to be comparable and it should be consistent for reporting globally. So there is a problem, right? Why? Because if I have to, essay promotes consistency, but recognize there needs to be flexibility also. See, in the process of consistency, we have to standardize now. SA 700 seems to be standard. That means after you must have already gone through, you have gone through, not must have, you have gone through in the inter. See students, what you are learning SA 700, you take any country's, any company's financial statements and the auditor's report. You see that contents of that auditor's report is same. When I cleared my CA in the year 2007, we had auditing and assurance standards. That means my finance in India, what type of audit report was drawn, it was not same of what the people would have done of Sri Lanka or say China. But today you go across the country, anywhere, and in fact what you are studying, as I told earlier, every students of our profession are learning this across the world. Same pattern, same content, same wordings. That means your profile is more like a global profile now. You understand now. See, technology is already a global. Through India's our accounting also has become global. Finance has been remained global from the time immemorial. That means, see, this is more like a words language now. That's why any investors can go to invest in any country. They can pick their financial statement. Tomorrow you can be appointed to audit. See, you can easily understand in one unknown country how the accounting and audit has been done. So they bring the flexibility also. So understanding audit reports forms audit report. Okay, consistency in the audit report when the audit has been conducted as per essay. So whenever promotes the credibility. So whenever you say we have done audit as per standards, yes, it brings a lot of credibility because people can identify it, they recognize it and make readily identifiable those audits have been conducted according to the global standards. So people trust if you tell we have done audit as per essay. You remember I had given that gobi manchuri example also. If you say Domino's pizza, the moment you see the Domino's pizza, you know for sure veg extravaganza is veg extravaganza only. You go anywhere, it's the same taste. That gives you confidence. You can straight away confidently take your friends, take your family, get inside and go and order. But this is not the situation of a gobi manchuri in China versus in Uganda versus in India. It can be all different. So it helps to promote the understanding. Okay, understanding of audit report, forms and content of the audit report. Now, first question comes, because we have got two objectives. One is the forming of opinion. How do you form an opinion? Forming an opinion on the financial statement. See students, once upon previously we had discussed, life is all revolving around happiness. And happiness is nothing but difference between expectation and reality. That's it. Now, we are constantly evaluating happiness or sadness. Sadness means the problem, I can say. What is the problem? That's also same, expectation and reality. So reality is what auditor has perceived. How? By performing audit procedures. Auditor has gone there, understood the accounting, got the information. Okay, he understood what is reality. What is reality? But is that reality what is expected? Then only you can form an opinion, no? Otherwise, okay, you know about some reality, but is it true or false? Is it okay, not okay? How can you judge? If I say your say tender coconut is 50 rupees, is it okay or not okay? What is your answer? You can never tell. You need a context, a comparison, or I can say you need one more dimension to it. If I say in 2005, you say yes. In 2030, you say no. Why? Because you are comparing price with the period. Then only you can get one perspective to it. So auditor has understood the reality, but whether the problem exists or do not exist, he can come to know only when he compare with the expectation. Now, who is the expectation here? First of all, what is your subject matter? Financial statement. Who did this? Management did it. How they are supposed to do? Who is going to tell? The financial reporting framework, like Ind AS. So you have to compare, you have to form an opinion whether the actual financial statement is as per what Ind AS has been told. If answer is yes, you are happy. If answer is no, there is a problem. And when the problem is there, you highlight that problem in the form of your opinion. Depending upon the severity of the problem, you use your words like adverse opinion, disclaimer of opinion, qualified opinion. If it is a simple, if it is immaterial, you say no problem, leave it, Papa. It's a small problem, chiller problem. So, auditor shall form an opinion whether the financial statements that are prepared, that means reality, in all the important aspects, what is material, somebody's influence, decision can get influenced, are as per applicable reporting framework. What is that? Say companies that or Ind AS. That's it. Now question comes, how do you form this opinion? Okay, for this, in order to form that opinion, auditor should obtain, because Ind AS, so you know, how do you know what is reality? What is, you should obtain that assurance, guarantee, a feeling, a conviction, a belief, whether financial statements are free from material misstatement. Now, what is material? Something very important. What is misstatement? I told you, mistake. What is mistake? Mistake is nothing but a difference between expectation and reality. So, this para is nothing but another version of this para only. So, you form the opinion by checking whether expectation and reality gap exist or not, free from material misstatement. How that is going to happen? Either due to fraud, or it will happen due to an error. Further, when the financial statements are prepared in accordance with the fair presentation framework, now you have got one more thing. See, by its very definition, I told you, what is fair presentation framework? It will permit you to do something extra, more than what the fair presentation has told, where the framework has told, or you can depart from that. Oh, that means you simply cannot compare financial reporting framework with the actuals. Why? Because sometimes there can be some deviations. Now, in case of fair presentation framework, you should also evaluate whether the financial statement achieves fair presentation. Is it fair? Considering the overall presentation structure and content of the financial statement, and whether the financial statement, including the related notes, represent the underlying transactions or events in a matter to achieve fair presentation. Like that Drona's case I told you. See, overall presentation, structure, the context, the content. See, these are all misleading. What is fair? I can also use the word, best word called not misleading. See, something can be truth. Okay, like what is this? If I ask you, see, I can write 2.25. See, 0.25 I'll write so small, which you don't see only, but I will say I have written it. This is misleading. You say this is not fair. You should not have done that. See, you got a feel, right? Did I lie? Did I not say 2.25? Yeah, but I wrote 2.25 in such a small font. You did not see only. And tomorrow I'll argue with you. Then you immediately say, sir, this is not fair. That's why fairness is something, your emotion comes into picture, your experience comes into picture. You have to see the context. You have to see the overall presentation, what that substance is. Even though it might have complied with the truth, but is it acceptable? Is it misleading? This is what you need to check. So we need not get so much detail in depth. Okay. Anyhow, because see, I'm explaining because I don't know, maybe something you must have missed. I'm trying to give you some perspective about the standard. Now, what is really important for us is this particular pair. Now, what is the form of opinion? Form means format, the structure, the word, I can say wordings. We say, application form. What is there in the application form? There is one structure and there are some words. So, you should express an unmodified opinion, clean opinion, when you conclude that the financial statements are as per the framework. That means when you know that expectation and reality gap is 0, you should say clean opinion. That means you should say everything is fine. In order to form that opinion, you should conclude whether he has obtained reasonable assurance that it's free from the misstatement. Now, done. So you are clear, students? What is that? How to form an opinion? What opinion you need to form? You need to form an opinion that the financial statements are free from misstatements, so that they are as per the financial reporting framework. So you can tell in your own language. Next comes, okay, what should be the elements in your report? Because everybody has to follow the same content. Tomorrow, no, I can fool. I may not include something and I say I forgot it. Or English language has got double meanings, two meanings it can have. Okay, so I may use certain set of words, and tomorrow I can say, no, I didn't say like this. Okay, I was trying to tell like this. See, boring. Boring has got two meanings. One is boring. Sometimes now I bore you with my lecture. And sometimes I really bore you with my lecture. I may tell you something very deeper. That is also boring. You see, in which context we have used the word boring. So I can fool using the English language. That's why we need, in order to have the consistency, they have told you the basic elements of the auditor's report. Okay, we have studied this at the inter level only. We'll quickly move. So first we need to have a title, and the title should be independent auditor's report, because tomorrow, what can go wrong, students? Why this is required? Because tomorrow there can be a practicing CA and he could have been appointed as an internal auditor. He will give an internal audit report and he says auditor's report because he is also an auditor. Now, tomorrow, since he is a practicing CA, or this PwC or KPMG can be this, these people can show, no, look, our PwC has given me audit report. But what was their nature? Like, what type of auditors they were? They were internal auditors. That's why our report should tell very clearly. That's why we have got internal audit standards also. Is it an independent auditor's report or internal auditor's report? So we have to be telling it very clearly. Now, addressee, okay, who should be addressed as per the circumstance. Generally, it is the members of the company. Now, opinion para. I told you previously this was the management's responsibility, but later they changed it. And see, why? Always know something very important should be at the beginning. You don't tell something important at the end. Correct? See, kids know when they come home, they tell everything to their mother. This happened, that happened. What is the most important thing? What is that first thing they will tell? What is the most important? What is more relevant? What they are very much excited? So ultimately, see, your purpose of audit is to form that opinion. And first tell that, no, instead of telling management responsibility, your responsibility. That's why the third element is the opinion. How should you start with your opinion? So first you need to identify the entity whose financial statements have audited, because you have to zero down. Otherwise, there will be a problem. Management can mislead. State the financial statements have been audited. Identify the title of each of the statements, what is comprising the statement, like balance sheet, P&L, name it. Refer to the notes also and specify the date and the period covered by the each statement comprising the financial statement. See, with this, no, you have brought a very good clarity on whose financials you work. You brought a clarity as to when you worked, what it comprised of. So all these elements you give the clarity. So when expressing the unmodified opinion, you have to use certain phrases like the words, I can say. So if you are using a fair presentation framework, when you are expressing opinion after telling all these things, you need to say, in our opinion, this is your first para. First para should say 5 things. Second para should say, in our opinion, the accompanying financial statement presents fairly in all material respect as per the financial reporting framework, or like companies that, in our opinion, it gives true and fair view. In India, what do? We consider this. Why? Because section 143 talks about that. 143 or 145 talks about, so you have to give true and fair view. Tomorrow, if the Companies Act gets amended, then and they will present fairly, then we may have to change it. In USA, we have got a practice of present fairly. In UK, we have got a practice of true and fair view. But nobody has defined it. What is truth? Accounting standard. What is fair? Not misleading. Both are two different elements. Okay, what is more important? Fairness is more important. Because something can be truth, but it is not fair. Now, if it is a compliance framework, what is compliance framework? You cannot deviate only. So you have to tell present in all material respect. You should never use the word fair. Now, if the references to the applicable reporting framework in the auditor is not to accounting standards, you should identify the origin of such a framework. Okay. Now they have given one extract of the auditor's opinion. See, we have audited the standalone financial statement of so and so company, which comprise of the balance sheet, P&L. See, we have audited one of the component items, then period 31st March, comprising the notes to accounts. Second para, in our opinion, the financial statement give the true and fair as per the Companies Act. See, they have given another thing. So you can just see, students, you can pick any randomly any country's financial statement, you can see. You see the same wordings. Everybody across the world. Okay, so this is what they have given. We have audited point number 1, balance sheet P&L. Then, in our opinion, information gives true and fair. So you have to study this. You have to prepare. You have to write and practice, because they will ask you to draft the opinion tab. Okay, so they have given, okay, what I have done, no, this contents I have given here for you to read, because what ICA has got a practice of asking questions from here only. So this is of the bank. So what I have done, I have taken it, I have typed it and given, just to see what they have given, because they will use it in a small way. But anyhow, I don't see they may ask you an examination question. So given the information is as per the Banking Regulation Act. First one was the Companies Act. So they give true and fair view in conformity with the accounting standards, companies accounting standard rules and other accounting principles about the balance sheet and the P&L and the CAFinal. Okay. After you have expressed the opinion, you have to give the basis for the opinion. In the basis for the opinion, since you don't have anything to qualify, you should straight away state that auditor was conducted as per standard. See, that this is a very dangerous thing, because when you say this word, it is mean that all 36 standards have been complied with. That means their objective. Each of the standards has got 2-3 objectives, and each of the standards have got 3, 5, 7 requirements. So every requirement must have been fulfilled. Then only we can say we have done the audit on standards on auditing. Previously, you could have skipped this. Followed, no? Then you would have said, okay, I didn't write only. No, it is mandatory that you have to write here. And if you have departed for any of the standards, you have to state which standard you departed, why you departed. You have to give the reason. Then you have to talk about your responsibility. But responsibility is a very big thing. That's why in the basis of opinion, you should talk about your responsibility. Like, what is your responsibility when it comes to forming an opinion? Then you should include one statement of independence, that I am independent as per the code of ethics issued by ICAI. That means there is no section 144 is applicable to me. Okay, I have complied with all the, whatever ICAI has told, I have complied with it, with related to code of ethics. And we have obtained sufficient and appropriate evidence. So what is my basis? My basis is standards on auditing I have followed. So this itself will remove all the material misstatements. Then I am having so many responsibilities. That means I am doing risk-based audit, where it is told in your responsibility is told that my responsibility is to identify the risk. I have communicated to the management. Then I am independent and I have obtained sufficient appropriate evidence. I can say there are 4 bases. After this, I have formed an opinion. So this is my basis or background for the opinion. Now, we have conducted the audit, so they have given some examples as per the section 143.10, so and so were conducted. So you will always see in the basis of opinion 4 elements, that we have done audit as per the standards, our responsibility is told in so and so place, we are independent of the entity, and we have obtained sufficient and appropriate evidence. Okay. Now, going concern is something, if applicable, because we have already seen, if there is no indicators of going concern, if everything is fine, you will skip this section. Okay. The auditor's responsibility is to obtain evidence about the use of going concern, and already we have seen this. If it is inappropriate, you will give the adverse opinion. So this section will never come. So when the going concern section will come, it will come only when the going concern is appropriate but significant material uncertainty exists and management have done the adequate disclosure. Then this section comes called a material uncertainty. If they have not made adequate disclosure, again this will go as a qualification or adverse opinion. Or management is unwilling to make, then also go for qualification. Only under one circumstance this comes, when there is a material uncertainty and management has adequately disclosed in the notes. So a lot of questions were there. We have already seen in the previous thing. Okay, so we'll proceed, students. We have seen all these things in the previous case. Like going concern is material uncertainty exists. You should give the heading, draw the attention. Okay, so they are given an example. So we draw your attention. Please note this. Huh? They may ask you to draft. And we have seen in one of the exam question also there, RTP or MTP. We draw your attention to note number 10 of so and so. Our accounts have been prepared on the going concern basis. There is a material uncertainty. Note number 11, consolidated financial statement have highlighted material uncertainty of the going concern. We also bring attention to note number 13. So our opinion is not modified. Same, note 10, 11, 13. You remember, no? Today morning or yesterday we have done that. And if it is not adequately met, then you have to give adverse or qualified opinion. Management is unwilling to consider the implication, etc. Now, if there is it is appropriate, then you don't need to give any paragraph. The next is your key audit matter. You should go in this order only. So if you have got a key audit matter, you have to communicate. We'll move on. We'll learn it later. What is key audit matter? Which is of most significant in the audit. In SA 701, we will learn about it. Other information, okay, in SA 720, we will learn about it, where you are comparing the financial statement with the annual report. Then responsibilities for the financial statement. This is called a management responsibility. So you have to quote the responsibility of the management. And auditor's report shall use the term appropriate in the context of legal framework applicable. You remember, no, SA 260, I told you there are two types of board. One is called supervisory board and then it is called executive board. In supervisory board, there is a one board of that is only for supervision, another is only for management. Here, TCWG and management can be one and the same. So what should be the appropriate heading? Should you tell auditor's report to the management, or auditor's report responsibility of the management, or responsibility of the management and TCWG? That depends upon the legal framework applicable. Okay, if you tell and TCWG, it means that in this organization, that's why they say in some entities, appropriate reference may be made to TCWG. That means if the TCWGs are totally independent of management, you say responsibility of the management and the TCWG. Okay, what is the responsibility? Preparation of the financial statement, internal control, giving all the information, assessing the going concern, etc. They need to also identify the responsible for the oversight when different from those, this section also identify those people oversight of the financial reporting process when the responsible for such oversight are different from those fulfilled in the next paragraph. In this case, heading of this section refer to the TCWG. This is what I told you. That means if somebody is oversighting are totally different from the one who is fulfilling their responsibility, you need to have the heading called TCWG also. Next, auditor's responsibility for the financial statement. This is the one of the biggest content in any auditor's report. Because here you are going to talk about yourself. What is your responsibility? So this will be primarily divided into three sections. The first section talks about what is audit. Because we need to make clear to the intended user what is audit. They should not have any misimpression that audit is investigation. So you start explaining, look, audit is an objective is to obtain the reasonable assurance and issue the auditor's report, SA 200. Then you should tell that reasonable assurance means high level of assurance. Okay, but not a guarantee that auditor has conducted and detected all the material misstatements. Okay, what is the concept of this reasonable assurance? It goes like this, students. So you have got a fever. Your one lawyer friend sees and says, okay, Baba, you have got a fever, no? Take Dolo 650. See, what type of assurance you got? You got a low assurance. Because he doesn't know anything. He just, by looking at your face, he must have suggested. Okay? You went to the medical. Medical person suggested you some medicine. Okay, 650, Dolo 650 he suggested. Now what you got? You got a reasonable. Do you want an absolute? Go to hospital. They will take 2 liters blood, 20 type of tests they will do, and they will give you absolute assurance. Who will give? An investigator. But why did you go to a doctor when you have got a fever? See, you could have asked your friend, you could have gone to medical, you could have gone to hospital. See, why did you go to a doctor? Because doctor is the only person in this world right now who will give you high level of reasonable assurance at reasonable price. See, here money is zero, but who is taking risk here? We are taking complete risk. Your lawyer friend will not take. Here there is some sort of risk. Okay, what is the money involved? Negligible, 10 rupees. Doctor also give. But see the comfort we get, no, when the doctor says, because we go with their experience, we go with their judgments. They will do some sort of test. We feel better. So that's why doctor will charge you 300. He has given you something worth 10 rupees only. But why you are paying him? For that feel. Because we need belief in our life that we will get well. Doctor has seen me. Because if some problem was there, he would have told me. Now this is what doctors do. Okay, they report. That means if there is a fraud or anything like, just like auditors report, doctors will say. But why don't we go to hospital? Because for the same favor, for the same 10 rupees, we may end up spending 30,000 rupees. Who can afford? Mukesh Ambani can afford. Okay, your all rich people can afford. But everybody cannot afford, no, to go to hospital for small fever. Okay, students. So that's the concept of a high level of reasonable assurance. You tell investors, look, Baba, don't go telling that reasonable means, okay, what is this reasonable? No, it's a high level of reasonable, like doctors give. Now, you tell them that misstatements can come from error or fraud. And explain what do you mean by material misstatement, because we are using the word material. Material means something which could have influenced your decision. And they provide a definition or description of materiality as per the framework. So with this, no, you have explained what is audit, what to expect from audit. I can say simple. First, you start with the what to expect from audit. So from a doctor, what do you expect? You'll do surgery there? No, you know what to expect from a doctor. In the next section, it talks about how auditor did audit. So this is like, okay, you know what to expect from me, how I'm going to do it. That's why you say that in this section, he said to exercise the professional, auditor's report shall say it's my responsibility to exercise the professional judgment, not just simple judgment, professional, emotionless, unbiased. That is called a professional, and ensure professional skepticism throughout the audit. Doctors, the moment they see they have developed, anybody after spending some time in the profession, they develop the sixth sense. One instance happened, students. One daughter-in-law and father-in-law met one instance, it seems. Okay, I heard it. I read it somewhere. Daughter-in-law is a nurse in cardiac arrest, like heart section. Okay, where emergency, heart attack and all will happen. No, that section she is a nurse. Now, in one of the function, after a long time, daughter-in-law and father-in-law met. By looking at the father-in-law's face, she said, "Are you okay? Is there a problem?" Father-in-law said, "I am perfectly all right. What happened? Nothing." She was not comfortable. She was like, she was not able to express it, but she was feeling some problem is there. And in that function, that day, the father-in-law met with a heart attack. Luckily, she was there. She gave that first treatment and she admitted to hospital. But you see, students, the sixth sense, how someone will develop. It will not be able, and this is coming from that skepticism, professional judgment. Because when you spend some time, our human brains gets adapted to that environment. We sense it. That's why we are called professionals. Now, you have exercised the professional judgment and skepticism. You describe the audit, like your job is to identify and assess the risk of misstatement, understand the internal controls, evaluate the appropriateness of the accounting policies, estimates, and the disclosures, appropriateness of the going concern, and evaluate the overall presentation structure and the content so that I can tell whether it is fair or not. This is my job. Internal control is the responsibility of the management. And through this process, I have identified the risk and I have designed my response by understanding the internal controls. So, through this section, students, you are telling very clearly to the investors that you have done risk-based audit, which we have learned in chapter number 4. And what does a risk-based audit includes? It includes understanding of the internal control, performing risk assessment procedure, trying to figure out where is the risk, and developing all your procedures on that. So you have got two procedures: test of control, substantive procedure. So if you feel that the controls are good, you perform test of controls. If you identify a risk which is not prevented by the test of control, you perform substantive procedure. So you explain your audit and to describe auditor's responsibility for the group engagement as per 600. So if you have done the group auditor, you will explain your responsibility. So state that as part of the, okay, same thing, what they have given in the chart, identify the risk of misstatement, obtain an understanding of the internal control. Okay, I'll move on first. And when using the work of another auditor, you describe your responsibility that, okay, to this extent, I'm using the work of another auditor. So I have relied on their work, because we discussed that in SA 600 is the only one place where you can tell, I have not done this part of the work. The auditor's responsibility for audit of the statement section shall also state. Okay. Okay. Now the third section. See, I told you there are three sections. First thing is, what is audit? Second is how you did that audit. And third, how did you communicate? So everything starts with your communication. Like, doctor, did he communicate to you? So we have to speak about that responsibility of, like, what is my responsibility to communicate? If I feel that you have got a serious problem, I cannot keep that problem in my mind. I have to speak to you. Okay, so you should state that the auditor communicates with the TCWG about the scope and timing, significant findings, deficiencies in the internal control, 260, 265. Now he has to state that he has provided TCWG with the statement that he has complied with the ethical requirement of independence, communicated all the relationships and matter that brought a thought to bear on the independence. Let's say 260, that fourth element, that I have all me and my network firms, you and your components, our audit fees is more than your non-audit fees. You have given, no? So that is that we have to tell in my audit report that all these things we have communicated to TCWG. And in case of where SA 701 key audit matter is applicable, we have to tell that before we are telling you, we have already told the TCWG that we are going to identify these matters as key audit matters. So auditor describes these matters as the auditor's matters unless law or regulation prescribes. In extremely rare circumstances, auditor determines that the matter should not be communicated. Okay, sometime now, like, okay, in accordance with the 701, auditor describes these matters in the auditor's report. Okay, we are going to tell something as key audit matter, but before I describe, I should have discussed this with the TCWG. Now, in some cases, it can so happen, this is what they say, unless the law or regulation preclude public disclosure, or when in extremely rare circumstances you feel it should not be communicated. Like when the law or regulation precludes, or when you feel that it should not be communicated. I can give one best example of defense industry. Now you are the auditor of, say, BrahMos, because BrahMos also has got money there. Audit is required. Somebody can misappropriate the money. Now, since you are the auditor, so you get access to the so many things like their defense, what is that called? Their drawings, their raw material from where they bring, how the process works, where all critical things, because they cannot deny that. You are bound by confidentiality. Now, certain things like from where they source the raw material, that may be a very critical element. Now, you must have spent too much of time to see whether any fraud and error happens there. So, in normal circumstances, you would have defined it as a key audit matter. Government may say, no, Baba, don't disclose such type of things as a key audit matter because it is defense related. Tomorrow, China will come to know. Tomorrow, somebody can come to know from where we are procuring the raw material. We don't want to disclose that. So, please keep it confidential. In that cases, auditor may, even though he would have spent a considerable time, even though this is a very clear-cut subject matter of key audit matter, auditor may decide not to do it by considering the public interest benefits of such communication. That's it. Okay, let's see. First, test your understanding one question. What they have told. Now, the auditors of a listed company has affirmed their audit report, in their audit report, communication of significant audit findings, including deficiency in the internal control, to TCWG. Where are such matters included in the audit report? See, this is the keyword. From this keyword, where the matters, because if they are talking about the significant findings and all, 260 talks about it. What do you mean by what are the elements of significant findings? How the internal control has to be communicated, 265 talks. But they are talking where such matters are included in the auditor's report that you have communicated to them. Also delve upon the importance of such communication. So now you have to say the auditor's responsibility section only we have to say as per SA 700, because it will assist the TCWG in fulfilling their responsibility. Because this communication is going to be very helpful. It will help them to fulfill their responsibility in oversight of the financial reporting process in the organization. That's it. A very small question. That's why a majority of the question will revolve around the reporting part. These are all simple questions. Yes, we will move on. Now, location of the description of the auditor's responsibility. See, never they told for anything else. The reason, you see, students, there are 3 sections. You see, this is one section, what is audit, and how you did audit, and what you communicated. It will go into, say, several pages, say 2 pages it may go. Now, what they said, now should I, okay, please can mark this important. If inter they didn't ask, they may ask you here, where you should show this entire 3 sections of responsibility. Okay, the standard says you can show within the body only. So generally, 99% of the time, this is what happens. Any annual report you take, the auditor's responsibility is told in the same audit report only, after management responsibility. Or what you can say, you can give as an appendix to the auditor's report. And in the responsibility section, you say our responsibility are told in the appendix 1. Like you say, have got CARO, you have got ICFR reporting, you can have appendix 3 auditor's responsibility. Or if it is mentioned in any website, like government has already told you a responsibility and it has put, or IC has told you, then you can give the reference of such website of the authority or the regulator, okay, if the auditor is permitted to do so. Okay, but 99% of the time it is told in the body of the report. Now, what is the other reporting responsibility? With this, we are done with the auditor's report. Now, depending upon the circumstance, there can be certain other reporting responsibility. See, your job, why did you go there? To express opinion on the financial statement. Yes, you expressed it. And if there are some special circumstances, you told about it. And you told your responsibility also. Like, for example, you assume that you are the student and your parents. I can say, I can give an analogy. Now, they come to me. Parent comes to me and asks, okay, what is your opinion about my kid? How do I know? I am not a Brahmanjani, no. So now what I do, I will start performing my procedures. I will give one mock test. I will ask some questions. Okay, I will observe. After this, I will form one opinion. Okay, is this kid ready? Ready for what? I need a benchmark. Ready to meet the expectation of ICA. That's the opinion I should be forming, no? Now I should communicate this to the parent. Yes, Baba, your kid is ready for expressing opinion. With this, my assignment is done. This is the first part. This is the traditional role of the auditor. Now, the parent may be expecting something different now. Or you may be working in this institution. Institution may be asking you to tell something more. It may be the parents may want to know about like how the kid was doing in the class. Say, Baba, it has nothing to do with how they are going to perform, no. Because I have seen very live instances where certain kids are sleeping in the classroom. They have done exceptionally good. So, we cannot just form an opinion just like that. Okay, maybe if they want to know, they have to do, I may have to report. They are like more, I can say, other reporting responsibilities. So if the auditor has got other reporting responsibility, like in CAG, CAG might have told, your RBI might have told, Companies Act might have told. So we are going to talk about the reporting responsibilities of other reporting responsibility that are in addition to the responsibility under SA, forming of opinion. It shall be addressed under the separate section and heading should be report on other legal and regulatory requirements. Otherwise, as appropriate, unless other reporting responsibility address the same topic as those presented under reporting responsibility by the SA, which in that case, reporting responsibility may be same. That means you don't have this. If Companies Act also talks to express opinion or they also express, then you can give the same. If the reporting responsibilities are presented in the same section, auditor shall clearly differentiate the other reporting responsibility from this. If the auditor's report contains a separate section that address the reporting responsibility, it shall be included in the section heading called a report on audit of financial statement. Okay, leave it. We need not go more deeper into it. Just understand that you should have one separate heading called a report on other legal and regulatory requirement. Means if you see my intermediate study material, I have explained this. Anyhow, we need not go more deeper what exactly they are trying to tell. The last part is the signature. Okay. Only a human being can an auditor. The reason is somebody has to take a responsibility. That's why firm can be there or LLP can be there. But if the LLP contains a company as a partner, then this LLP cannot be appointed as a auditor of a company. The primary reason here is if you bring any company is an artificial person, it is an imaginary person, you cannot punish them. Tomorrow people, the real people who did the fraud, they will abscond. They say this company did it. That's why students, somebody has to own it. That's why only a human being can be an auditor. So that person has to authenticate, identify themselves in their personal name. Because tomorrow if something goes wrong, we will go and check their certificate also. ICA can take back their certificate. Where the firm is appointed as an auditor, the personal name of the auditor and the name of the firm also should be mentioned along with the membership number and the firm registration number. Okay, so this part we can skip, not required. So they are given one example how the presentation has to happen. Now, okay, they are told here under section 145, only the person appointed as an auditor of the company, or if a partnership has been appointed, any partner in the firm can sign the auditor's report. This is what they have told. Now, if A, B, C are in the practice of ABC and Co, then any of A, B or C can sign on behalf of ABC and Co. But now, in view of objection raised by the Department of the Company Affairs, the Council of the Institute has recommended to the members who are in practice in the partnership that signature on or authentication of the auditor's report by any of the document should be in the following manner. They said you should write like this: for ABC and Co. Tell your firm name. Chartered accountants you have to tell. Now you mention your firm's registration number. So we have identified the firm, and then you put your signature, write your name and membership number, and you tell your designation called a proprietor or a partner. So this is how you should sign. Now, clause 12, part 1 of the first schedule of the Chartered Accountants Act deems to be guilty of misconduct if you permit somebody else who is a non-member to sign on your behalf. Leave it. So what should be the place? Wherever you sign, you have to sign the city and the date, because this date is very important to know when did you sign it. That's why you see, no students, whenever doctor gives a prescription, they will always write a date. Date is very important because timestamp is required. Now, what evidence it will give you? Date in the auditor's report that all the statements comprising the financial statement have been prepared, and those with the recognized authority have asserted that they have taken the responsibility. That means financial statement are prepared as per the framework and TCWG has taken the responsibility, and this we have got through a written representation that they have fulfilled their responsibility. So the date of the auditor's report, you remember in the morning we have seen some of the Q&A. The date of the report was 31st July. Auditor's written representation was 15th of April. See, there was a big gap. So many things could have missed out in between. That's why date is very important, because it gives the evidence that management has taken that responsibility. And how auditor will ensure? We will take the written representation just on one day before or the same day of the auditor's report. Okay, so this is all about your 13 elements of your auditor's report. So they may not ask much questions. We don't have any questions also. Just for a recap sake, I went in detail. Otherwise, we could have skipped it. Now, what if the auditor report has been prescribed by law? Like for example, if you go to the Companies Act, in which format you have to prepare? It is very clearly told SA 700. But if you see tax audit, are you preparing tax audit form number 3CA as per SA 700? Answer is no. Now, who told you in which format you have to write the words? That's why we call them form number 3CA. What is form? Format or the wordings, the structure. Now, what if the auditor's report format is prescribed by law or regulation? In such cases, you have to follow that only. No, if the government is telling that cooperative society audit report should be in form number 10B, you have to give in form number 10B only. You cannot use SA 700. Okay. If the auditor is required to use a specific layout or the wordings, you shall refer the standards. Now one question comes, sir, can I tell we have done audit as per the standards so that it is comparable? Yes. When at the minimum, all these elements are included, then only you can say we have done the audit as per the standard SA 700, so that it becomes very comparable. When it should have a title. Form number 3C has got a title. Yes. Address is there. Opinion is there. But identification of the financial statement that you are independent, and section that addresses not inconsistent with the going concern, basis for the qualified opinion, key audit matter, description of the responsibility, auditor's responsibility, signature, place, date. So 13 elements are there. If these 13 elements are included, then you can refer the essay. If it is missing, you should not say that we have done audit as per the standards. This word should not be appearing. Now, please students, please note that chartered accountant need to ensure compliance with the requirement of the signature in the relevant law or regulation, essays and relevant announcements, clarification by HEI. UDIN has become mandatory from 1st of July 2019. Okay, UDIN is applicable both for manually and digitally signed reports. Okay, so they say, okay, anyhow, UDIN we will learn later again in professional ethics also. I hope students you are clear. Yes. Just a minute. Okay, next. Auditor's report conducted in accordance with the standards on auditing as well as international standards on auditing. Now, first of all, why this requirement comes into picture that you have to you have done an audit as per standards as well as international. Okay, it can be something like this, friends, for a group audit. Like Amazon has got, Amazon is in the USA. It has put one subsidiary called Amazon India Private Limited. Now, or India Limited, whatever, doesn't matter. Now, you have done the audit of the Amazon India has to prepare a financial statement. Now, this financial statement has to be audited as per, say, for example, accounting standards. And now, which standards you have followed to audit? You have followed standards on auditing. So, you are going to give an audit report that this is the financial statement audited as per standards on auditing. Now, they require this financial statement for consolidation there. Okay, now how they are prepared? Okay, there's something called you may totally prepare another financial statement as per US GAAP. This is as per accounting standard. Or there is alternatively, this is option number 1. You can totally prepare another report, another financial statement. That means there are two financial statements. One is your accounting standard, another is your IFRS or say US GAAP financial. Alternatively, you have got the accounting standard financial statement. You will prepare one statement called gap adjustments. Which all gaps are like how, what all the accounting, the items for which accounting treatment is different, that only you adjust. That means in the first case, I don't need this. But in the second case, I can read this only in line with this. Now imagine you are the Indian auditor who have done the audit of this and you have to do the audit of this also, like this particular statement also. Now you have to give an audit report to the foreign country and they are expecting you to do the audit as per ISA. See, today you don't have a problem because SA plus ISA are one and the same. I told you same para number because you are all SAs are from the ISA only. But once upon a time this problem was there. Your US standards on auditing and Indian standards on auditing was totally different. Okay, how should you address in such case? An auditor may be required to conduct an audit in addition to the standards on auditing by ICAI, the ISA. That means you may have to do the 2 times audit. If this is the case, auditor's report may refers to standards on auditing in addition to international audit. That means rather than issuing two reports, you may issue one report. And in that report only you said, look, Baba, we have done this audit from the standards on auditing point of view also, ISA also. Only if there is no conflict between requirements in the ISA, that the auditor would have formed a different opinion and not to include an emphasis of matter required by the emphasis of the matter. Like for example, you were, see again I told you these things are hypothetical, won't appear today. Like for example, your SA 501 requires you to attend inventory verification. Your ISA may not require you to do the inventory verification. So this is a clear-cut conflict now. Or then, okay, so if there is no conflict between the requirements of ISA and standards on auditing, yes, then you can give one single report referring both. But if you are going to form a different opinion only, if you follow something through ISA, your opinion will be different. If you follow through SA, your opinion would have been different. Like obtaining management representation. If management don't give you representation, standards on auditing say you give adverse opinion. ISA may say leave it. See, in such cases, your opinion would be different. So in that case, you cannot give the single. And not to include emphasis of matter or any other matter paragraph. In that case, you can give. Now, second thing, auditor's report should include minimum of each of the elements prescribed by law or regulations set out in the auditor's report, like whatever the 13 elements. When the auditor's report refers to both ESA and auditing standards of jurisdiction, say SA, they should clearly identify the same, including jurisdiction of the origin of the other auditing standards. Okay, what they are going to add, like what they are trying to tell, which all standards they are referring, who framed it. Now, let us see test your knowledge question number 7. Okay, prescribed by law, you don't have any question. So, this is a priority question. We have told in test your knowledge 7. KPI is a joint venture of KPI Incorporation, a company based in USA. Okay, so USA KPI Incorporation is a US based company. KPI Limited must be in India and is one of the joint venture. And the other company is OPQ Limited from Japan. Now, KP Limited was registered in India and operating as a marketing support company for incorporation. All the cost of KPI are incurred in India and entire revenue of KPI Incorporation is generated in USD. The entire funding requirements of KPI Limited are taken care by the joint venture partners only. Since KPI Limited is based in India, hence it is also required to get its financial statement audited under the Companies Act. Like I told you the Amazon example. The company appointed new auditors for the audit of financial statement. After doing all the appointment formalities, wherein the auditors are required to ensure compliance with the standards on auditing and international standards on auditing. This is the only one chapter number 7, where you read this word international standards on auditing. So with this, no, you understand this is from chapter number 7, and they are talking standards on auditing and international. So this is about the first concept, SA 700. As an expert, you are required to advise about the requirements regarding the auditor's report for conducting audit as per the both standards. So this is a very straightforward answer. Okay, if there is no conflict, you can mention the both, not to include emphasis of matter. It should include all the elements and it should identify both the standards. Okay. So author comments in the study material, they did not provide the answer, but they simply said refer para 3.4. And we have to be very careful with this type of question. That's why I marked it as a priority. When they have not given the straightforward answer, they always say refer para. It's a very high important question. Yes, I hope you are clear, students, with this example, what it means. So we'll move on. Supplementary information presented with the financial statement. Mark it very important. So what is supplementary information presented with the financial statement? Okay, I'll give an example to you before we read their example. See, you remember, no, one Pulwama attack happened. 40 people died, our soldiers. Wow, it's a very big incident. Okay, so much media publicity and all we got. This incident attracted media attention. Now, ATM did one activity. They started to raise the fund for the family members of these soldiers who died in that Pulwama attack. Okay, so now imagine, students, what they would have done. They could have collected, say, 50 crore rupees and they would have distributed to the family members. Now, since the cash involved here, now in the notes to accounts, they might have given one note that during the year, Paytm has initiated so and so activities, 50 crore was collected and 50 crore was distributed to all the members. Did these notes to accounts also certified by the auditor? Yes. Now, what impression somebody will get? Okay, that this Paytm must have really given this money to all the members of the family. Now, did the auditor verify this? Or does the auditor have got any responsibility to verify? Oh, have you collected? Okay, what is the PAN number? What is the Aadhaar card of those people? How much you transfer? Which bank account you transferred? This is some extra activity they have done. It is not part of your financial reporting framework. It's not your business there. But when I am going to sign it, it can create an impression that I have audited this number. That's why I can call it as a supplementary information. It was not required by the framework. It is some additional information you are given. And this is going to create a problem. So what auditor can do? Okay, first thing you may have to check. Does Companies Act tells you something about the audit of this? If yes, then you have to audit. That means you have to verify whether completeness, all the assertions, whether there is a transparency, everything you have to verify. Fraud, everything becomes applicable there. Because there can be big fraud also happening, who knows now. Second, if it is not required by the Companies Act, you have to tell very clearly management, look Baba, when you have told note number 28 that this 50 crore, this we transfer and all, you give one heading to note number 58 that this is unaudited information. Then I'm okay. Because when I'm signing it, someone is very clear that it is unaudited financial information. But if the management is not going to say, refuse, then what I'm going to do in my audit report, in other matter paragraph, I am going to say that note number 26 is unaudited. See, with this now you brought a very clear-cut clarity that something which is not connected with your financial statement, a supplementary information, when it is presented with the financial statement, how to address it. So, if the supplementary information, in the old syllabus, no, they had already asked one question on this. One profit and loss account at the segment level profit and loss was presented, not required. Okay, why Companies Act never told that? Companies Act told present something as per Ind AS, and Ind AS told operating segments, revenue, assets. It never told present P&L account. So this becomes one supplementary information. Okay, so this is something which had already come in the previous old syllabus. So if the supplementary information is not required by the framework, but it is presented, you should evaluate whether such supplementary information is integral part. If yes, you should cover in your audit report. Very first thing, you should see whether it is integral part. If answer is yes, you have to verify it. If it is not integral part, you should see whether they have clearly differentiated from the audited information. Like, have they given a proper heading? If they have not done, if they have done, well and good, done, matter close. If they have not done, ask the management to change the headings. But if the management is going to refuse it, then you have to identify the unaudited supplementary information and explain in the report that such information has not been audited. Okay. Like for example, they have given, please note this example, they can again ask you in your examination. When notes to the financial statement includes an explanation of reconciliation of the extent to which the financial statement comply with another reporting framework. Now, this is what? The gap adjustment. It is like this. Amazon India Private Limited prepare the accounting standards financial statement. They have prepared US gap adjustment. Okay. And what they have done, this US gap adjustment they have given in the notes to accounts. And auditor is signing this. What impression somebody will get? First of all, does Companies Act requires US gap adjustments also? No, Companies Act never told. So it is never the integral part. If it is not the integral part, this US gap adjustment, they should give one clear-cut heading. No, that US gap adjustment our auditors didn't verify. I hope you are clear. So this should be considered, this to be supplementary information. And it cannot be clear if it is not clearly differentiated. Auditor's opinion should cover the note. They should say we have not audited that US gap supplements, US gap adjustments. When the additional profit and loss account was given, a specific item of expenditure is disclosed as a separate schedule. Like, who told to give that profit and loss account was a separate item of expenditure? Companies that never disclosed it. So you can consider it as a supplementary information and differentiate it very clearly. So these are all the two examples. Now in your examination, they can frame. So please mark it very important. They can frame one question based on this because they have highlighted this. And already in the old syllabus, before May 2024, they had asked question based on this example. So you have to code this answer. I hope it's clear, friends. It's done. Yes, with this we are done. And you see, hardly two questions you have got it. Supplementary information and all, they are not asked. That's why its relative importance is very low. Anyhow, we have to understand it because later in SA 705 we have some trickiness. So this understanding SA 700 will help us to understand SA 705 better. Okay, friends, so it's clear. So we'll move on to SA 701. Okay, maybe much important than 700. Now, what is SA 701? Key audit matter in the independent auditor's report. What is key? Key is important. See, your house key is very important. You miss it, you cannot enter. Audit is opinion on the financials. Matter is something of issue, I can say. Check the Google meaning of the word matter. Matter means substance, an issue. So, what is that you are trying to communicate here? An issue which has affected your opinion somewhere and which was very important. You have given substantial amount of time there because it was not so easy. Followed? So this is what you need to communicate here. Okay, I can give you some one analogy like this so that you can understand what is key audit matter. Like I'm teaching intermediate, inter classes. Okay, so a lot of students are there, but one of the student come from BSc background. Because we'll talk about the direct entry after BCom. All these three students are from the BCom background. Now, when you talk about this particular student, there is one particular subject which has got an issue. All other subjects maybe are totally new or that doesn't really matter to anybody. Any BSc students also, it doesn't matter. All the subjects except one subject, that is your accounts. Because accounts is a critical subject, very important subject, fundamental subject, and account is something they are coming across first time. In fact, this should be the very easy subject for them because accounts has got a flavor of maths, and in fact account has been given by the mathematician only, who is called a Luca Pacioli, whom we call father of accounting. So BSc students should be able to understand it fast, but whatever. Now if you think from my perspective, okay, getting that assurance whether they are fine, they are meeting expectation. See, for this student, for me, account is something I need to have a special consideration because this is very important for me, for this particular student. You got my point, no? So I may want to talk more thing about this, or I may want to warn their parents. I may want to tell, communicate, look, Baba, this accounts was the very critical thing. And how did I address it? How I got an assurance that this student has really addressed these accounts? We can call them as a key audit matter. So SA 701 provides guidance on the key audit matter. This deals with the responsibility to communicate the key auditor matters in the report so that it is helpful for the investors also to understand. Management also comes to know. Okay, they can also give special importance to it. Now, key audit matters are those in the professional judgments were of significance in the audit of financial statement of the current period. They were very important, significant. The key audit matters are selected from the matters communicated with the TCWG. Okay, so we are supposed to communicate all our audit findings as per SSC 260. We have to give our communicate the findings, and this matter is selected from key audit matter. So if any matter is a matter of qualification, modification, it cannot be key audit matter because always the opinion goes first, then key audit matter comes. Now, what is the purpose? It is to enhance the communicative value of auditor's report by providing greater transparency about the audit. Okay, like how did you teach? Which method you followed? So primarily, you are going to tell about your procedures there. Okay, they have given the examples also, we'll see that. So primarily, your key audit matter is talking about more ROMM areas. Like how did you address that? See, previously we never used to tell. Okay, auditors never used to tell what audit procedures they perform. But through key audit matters, we are supposed to tell like how did I address it? Did I made an inquiry? Did I made an external confirmation? Did I verify? Did I do the calculation, or did I appoint an expert? Like how did you solve this problem? High risk area. So it provides a communicative value, brings transparency, additional information to the intended users, which assist them to understand those matters and the professional judgment of the auditors. So it may also assist the intended users in understanding of the entity and areas of significant management judgments. Okay, so they can ask you in examination what is the purpose or importance. So you should tell point number one, it enhances the communicative value. Point number two, it assists them in understanding the matters of professional judgments of the auditor, assists in understanding of the entity and the management judgments. Auditor's judgment, it will help to understand. Management judgment, it will help to understand and brings transparency to the auditor. So remember these 3 points. What is the purpose of key audit matter? Key audit matter, transparency in audit, auditor's judgment, management judgment, in simple short. So objective is to enhance the communicative value and assist the users in understanding matters in the professional judgments were of most important. Okay, again they have repeated the same, communicating the key audit matter, having form. Okay, scope. Communicating the key audit matter in the auditor's report in the context of auditor having formed an opinion, because after forming opinion only can communicate key audit matter. You cannot communicate the key audit matter before forming of the opinion. Now, why? Because communicating key audit matter is not a substitute for disclosures in the financial statements that are applicable to the reporting framework, which the management is supposed to make. See, what management can do? Management will tell the auditor, like, sir, we will not tell, you tell in your audit report. You only explain about it. No, it is not a substitute. Management should have disclosed everything related, like suppose provisioning or litigation expense is there. It was very tricky. It was very difficult to figure out like how much provision has to be done. So management must have appointed auditors expert or management expert and all they must have done. Let them explain in their notes to account like how did they address it. Then I will explain in my audit report like how did I look at the management's assessment, how did I verify it. So management cannot escape from their responsibility just because the auditor has told how it was addressed. So it is not a substitute for disclosures. Second, it is not a substitute for modified opinion. So if the accounting is not done as per the framework, we have to express modified opinion. So I cannot skip my responsibility by telling it in the key audit matter. It is not substitute for reporting of SA 570 going concern. That means if any material uncertainty exists, okay, it is more important than key audit matter, because by default, a going concern issue is a key audit matter only. But you cannot tell in the key audit matter section. You have to tell in the material uncertainty related to the going concern section only. And if the management have not made the adequate disclosure, going concern will turn into a quality modification. I hope students it is fitting in your brain. So if the going concern is applicable, so when 570 comes, 570 comes only in one circumstance where there is a material uncertainty plus management has made adequate disclosures. In this case, only one heading comes, material uncertainty related to the going concern. If these things are missing, straight away auditor will modify it. And if he modifies, or if it is a subject matter of going concern, it can never become key audit matter, because one content, one matter, two places you cannot tell. You have to tell at one place only. Now, which place to tell, that depends upon the relative significance, importance. And again, it is not an opinion on the matters. Okay, it's not a separate opinion that this is good, this is bad. No, we will give opinion on for the financial statement as a whole. So this is very important, students. You can make a mark. Now, there is no questions, but they can ask you questions on it. So the key audit matter, is it a substitute? No, you should tell this, because they can create a case that management asked to write it, or they can be a case there was a going concern issue which was told as a key audit matter. Then you should tell all these four and say no, in the given case this is wrong. Now, applicability of key audit matter, it is applies to audit of complete set of financial statement only. Please understand, single financial statement it is not applicable. We'll learn it later. Of listed entities or circumstances where auditor otherwise decide to key audit matter in the auditor's report. Like for example, one is listed entity, it is mandatory, but you have got an unlisted public company whose turnover is 10,000 crore. It's very critical. So you may decide to communicate even though it was not mandatory for you, or sometimes may be required by law or regulation to communicate the key audit matter. Like CAG only will tell, please communicate it. However, SA 705 prohibits keep communicating key audit matter when you disclaim the opinion. See, what do you mean by when you disclaim the opinion? When you say I did not get any evidence about the financial statement, like for example, in this example only, if this student never attended my class, this BSc student never attended my class, at the end, if the parent come and ask me, how is my kid? What should I say? What opinion should I say? I say, I don't know. This is called a disclaimer. Now, when I am telling disclaimer, can I comment anything on the accounting knowledge of this student? No. That's why when you give key audit, when you disclaim the opinion on the financial statement as a whole, you cannot express key audit matter, because key audit matter talks about how auditor did some work. But you never work. No. So how can you communicate key audit matter? Okay. So this is all about the applicability. How do you determine the key audit matter? So auditor shall determine the key audit matter from the matters communicated with the TCWG. And those matters that are required significant auditor attention, an auditor shall take into account, please note this, important, areas of high risk of material misstatement or significant risks identified as per 315. What are the areas of significant risk? Fraud, related party transaction, complex transactions, outside normal course of business transactions, material uncertainty in estimation, significant accounting developments like Ind AS 116 came, your lease accounting got changed. Like, it's a very critical thing now. How did you audit that now? How did you see that this Ind AS transition has happened properly for Ind AS 116? So if it's one of the 6 elements of significant risk, or if you have assessed the risk of misstatement is very high, yes, you can think that to be a key audit matter. Or significant auditor's judgment related to areas that involve significant management judgments, including accounting estimate that have got high estimation uncertainty. Okay, same point of this estimation uncertainty. Or effect on the auditor significant events and transactions occurred during the year. Like during the year, mergers and acquisition happened. Or best example, forget mergers and acquisition. You migrated from, this is the best example, you migrated from Tally to SAP. This is one of the event happened. And how it is going to impact audit? It is going to impact audit in a big way. How did you address it now? This item can be one of the key audit matter, because here it has increased the risk of misstatements, or they might have moved into one new segment now, new product. Now there is a risk in that product. How did the auditor look at it? So that can be key audit matter. So determining key audit matter. What is a key audit matter? Something auditor spent considerable amount of time, which is significant, which has demanded significant attention of the auditor. That is the key audit matter. So which matter should I communicate as a key audit matter? You have to consider the risk, management judgment, and effect of the transactions. Now, examples of key audit matter, like impairment. Okay, so much judgment will be involved. Provision of losses and contingencies. Okay, some contingent event happened, effect. Valuation of the financial instrument. Revenue recognition, taxation matters. Okay, so these are all the areas where you may have to, you can select as a key audit matter. Now, communicating key audit matter. How should you communicate now? So, communicating, you should start with one introductory language. Like, how do you communicate opinion? We have seen already. Okay, you should state these. Basis of opinion, you should state these. You should tell this phrase should be used. Okay, we have already seen. But how you should communicate the key audit matter? Yes, first you should have an introductory language. In that thing, you should state key audit matters are those. First you say, what do you mean by key audit matter? First explain key audit matter. Like you explain what is audit. Like you explain, key audit matters are those which in the auditor's professional judgment were of significance in the audit of financial statement. Then you say these matters were addressed in the context of auditor's financial statement as a whole and does not provide separate opinion. Tell them very clearly, because they should not get misunderstand that, oh, the auditor is expressing opinion on that particular item. No, I am talking from the context of audit of financial statement as a whole. And in case of no key audit matter, you should specifically mention that by carrying a key audit matter paragraph that we do not have any matter to communicate. Now, they have given some extract of key audit matter. Mark it very important, students, because in the exam, they will give you this example, what they have given here. So you may have to carefully read it, because one of the question I will show you later, this particular content they have given. Okay, it is something like this. A bank is required to comply with the master circular of RBI. This is the bank. They have to comply with the master circular about the prudential norms like income recognition, asset classification as NPA, provisioning for NPA, etc. The non-performing assets and the minimum provision required for such fact. The identification of the NPA, because this is a very risky thing, lot of judgment is involved, provision is required, also affect the factors like stress testing, liquidity concerns, etc. The provision for identified NPAs is estimated based on the aging classification. In addition, the bank also required to implement the resolution framework of COVID-19, because stress resolution framework has to be applied. They need to have sufficient capital and all. Since the identification of NPA and provisioning for advances require considerable level of the management estimation, we have defined them, identified them as a key audit matter. So first you explain them. Look, NPA is there. Every bank has got an NPA, but we are going through COVID-19 now. And it requires a lot of estimations. There is a lot of stress going on in the market. A lot of people may default because of the COVID situations. That's why in 2020, NPA became one of the key audit matter. Like how auditor verified that proper provisions were done. Because banks might have given some moratorium. No, they must have given some 6 months delay time. Like they must have given, like RBI must have come with some circular. But people could have taken that as an advantage to default also. So how auditor verified it? So first you explain what is that item you have identified, like why you consider it as a key audit matter. So that is what you explain, and you say this. Before this, you explain in general what is key audit matter. Okay, this is the generic statement. Then you have to give one by one statement, like what is one by one key audit matters. Okay, how this is addressed? Then you say that we try to understand the process of the internal control, how the approval is going to happen, how the review is going to happen. We monitor the credit check, we check the NPA provisions, we check the credit CIBIL rating. Now, tested the bank's process of identification of the loan. On test basis, we verified the special mention accounts. That means accounts which have not yet become NPA but on the verge of becoming NPA. We check the credit rating of the CIBIL rating. So whatever, you can write in your own language. So you are going to tell here, what did you do? So I hope you are clear, students. First you are telling what is key audit matter. Then you identify one particular matter like impairment, like goodwill valuation, like your revenue recognition. And then you say, what is the risk involved? What was the problem here? Why it demanded so much attention? And what did you do? How did you solve that problem? Because if you are not in a position to solve, this would have been your modification and it would have been sitting in the basis of opinion. Okay. Now one more example they gave. As discussed in note number 25 of the standalone, the revenue is measured net of trade discounts and volume. So this is about the revenue recognition. Certain discounts and rebates were finalized when the precise amounts are known, and revenue therefore includes estimate of the variable consideration. India's 115 talks about the variable, because discounts can be variable. We don't know. We have to make an estimate. So this includes establishing accrual at the end of the year. Like for example, discount coupons you might have given. At the end of it, maybe become very difficult to figure out how much discount coupon you need to recognize as a revenue. So the unsettled portion of the variable consideration results in discounts and rebate due to the customers at the end. Therefore, there is the risk of revenue being overstated due to fraud through manipulation of the discounts and rebates. So many discount coupons could have been not clear, or you can issue discount coupons and say there can be fraud can happen. That's why, because of this risk, we have identified them as a key audit matter. Next question. Okay, you identified a risk. It gathered your significant attention. How did you solve it? How did you get a confirmation that there is no fraud? Yes, now you explain. Yes, we understood the process followed by the management. We have verified the internal controls. We checked the IT systems of giving discount coupons. We have inspected on a sample basis some of the customer contracts. Okay, how did they how the discount was granted? We checked the authorization of the board of directors, performed substantive testing of selecting of samples and discount, and recorded during the year and verified with some recomputations we have did. So you explain, you write in your own language. But my point is, either they can ask you a question on this discount coupon, or they can ask you a question on NPA provisioning. So you should strike to students. By the context only, you should know that, okay, they may not tell it's key audit matter. They may say how it should be reported in the auditor's report. Right, Baba? This is a very dangerous question. But if you remember this example, what they have given, no, bank NPA, discount coupon, fraud NPA, then you will understand that they must be talking about your key audit matter. Yes, let us see some of the questions. Okay, there are some 6 questions in the Q&A. Very important. That's why I told, no, first chapter is not important. Here you see, below is the draft extract of the auditor's report of a listed company. Para A, below reflects certain matters stated in the auditor's report communicated with the CFO of a company. Okay, some matters, no, auditor has told to the CFO. And para B talks the nature of the auditor's response to the said matters. Now, company recognizes the revenue when the control of goods is transferred to the customer, net of consideration which company expects to receive those from the customers. The terms of sales agreements are based on the terms and conditions relevant of the relevant contract, and nature of discounts and rebate create complexities that require judgment in estimating revenue. Did I not tell you, students? You see here, it creates complexities. Your amount may not be known. Discounts and rebates can require significant management judgments. We read company's revenue recognition policy and assess its compliance in terms of Ind AS 115. We read the company's revenue recognition policy, understanding of the process. Okay, somewhere you must have told here. IT controls, company system, over this thing, rebate system, company rebate account accruals. See, we are assessing the company's revenue recognition policies. We assess the design and control of the effectiveness of the internal control, the first point. We tested the sample basis that revenue has been recognized with the supporting documents, that we have done the substantive testing. Now, from the description given above, can you please identify what auditors are trying to report and under what heading such matter should be reflected in the auditor's report? Now, you tell me, students. Imagine you are sitting in the examination hall. You read this. How do you figure out now? First of all, what you are trying to report, you come to know that this must be from chapter number 7. How do you figure out that this they are talking about SA 701? Tell me the keyword here. What keyword is that? And the entire question has been framed based on the example given here. This is, if you would have gone, they know that this is written in a very small font. Already some previous examples were given. So students may not read this example. Now your entire success lies in identifying this question, that this is from chapter number 7, by going through that example. So in the examination, they can give the same story talking about the NPA. That's why please read it. Okay. Once you know it. So what they are trying to communicate? They are trying to communicate the key audit matter. What is key audit matter? You explain key audit matter. What are the consideration? Okay, it's estimation. One of the reasons is estimation uncertainty. We have seen, there are 3 reasons for key audit matter. One is risk, like the fraud example, or second is the significant judgments. Okay, so here we can say significant uncertainty, revenue recognition complexities are involved. So that's why it's key audit matter. So it describes how the auditor has been addressed it. Okay, so they can ask you NPA in the bank. Next, Arjun was appointed as an engagement partner for audit of Kurukshetra Tech Limited on behalf of Navy and Associates. Okay, so he is an engagement partner. Krishna was appointed as an engagement quality control EQCR. Okay, now when you read this, your mind will take you to chapter number 1, SQC1. You must be thinking that this must be some issue between engagement partner and EQCR. During the financial year, they implemented ERP system in phases, leading to automation of certain business processes. Now you wonder, EQCR and this, what this point came? Okay, let's see. Implementation had a substantial impact on the auditor's overall strategy. Now Arjun discussed the implementation of such system with the Krishna and also told him that such matter can be key audit matter. See, from this you understand, Baba, they are not talking SQC1, but this question is related to chapter number 7, concept number 2, key audit matter. Krishna considered the significance of the matter. However, He was of the opinion that ERP implementation did not appear to link with the matters disclosed in the financial statement. Arey Baba, but all the financial statement items are significantly affected by like provision, the calculations, everything. So there was no need to disclose. Whether the contention of Krishna is appropriate, no, you have to tell. With respect to the matters as a key audit matter, no, you have to tell. How do you decide whether a matter is a key audit matter or not? You see the risk, estimation, and effect of the event. Then auditor shall determine the matter to be considered as the most significant. These are a consideration. Focus on the nature of the matters communicated with those charged with the governance, because you would have discussed this with the matter. Such matters often lead to the matters disclosed in the financial statement and intended to reflect the areas of audit, okay, which can be help to the intended users. The fact that considerations are required not intended to imply that the fact that these considerations are required is not intended to imply matters related to them are always key audit matter. Rather, matters related to such specific considerations are everything what you communicate with the key audit with the TCWG need not be key audit matter, but any key audit matter will be coming only from the matters which you would have discussed with the TCWG, okay, which is most significant. In addition to the matters related to the specific required consideration, there may be other matters also communicated with the TCWG. Therefore, there may be key audit matter. Such may include example relevant to the audit, that like in new IT system, change it to the existing IT system, etc. That means it need not be related to your financial statement items only. It can be something different also, which can affect your overall audit strategy. In fact, this has come from the standards, the BEAR standard. In the given case, ERP was implemented, which is going to affect the overall strategy. Thus, it becomes an item of key audit matter. So, contention of Krishna is not appropriate. So, this is one of the question you have to study properly, students. If you feel you have to have a revision, then you have to mark it a priority 1 question. Yeah, but you know that it's a key audit matter. You can talk about key audit matter. Means all this para you need not write like this. Maybe 2 marks you would have got by writing this only. All these statements you need not write. Okay, you can say that this is one of the key audit matter of shifting to the new system. You can write in your own language. Okay, now November 25 MTP, they asked one question. RJ Chartered Accountants of a listed manufacturing company, engagement team identified areas such as valuation of obsolete inventory, impairment, major tax dispute, etc. Significant auditor attention. Keyword. Please note down this keyword. They may not tell you key audit matter. The word significant auditor attention will be applicable only for SA 701, key audit matter. So, audit committee, however, expressed concern that highlighting the tax dispute could attract negative publicity and advised the auditor not to include this in the report. Now, you have to think, can you exclude something? Yes, we have already seen. If you feel that informing key audit matter will create more problem than helping the investors or the company, you may decide not to communicate, or the law and regulation prohibits you. I told you defense example. As an engagement partner, evaluate the professional considerations and reporting implications in this situation. In the given case, RJ associates are required to determine and communicate key audit matters in accordance with SA 701. Now, I don't know whether this was the question or this was something to be here. The auditor shall determine matters of high risk, same points you will write. Okay. So, however, auditor shall describe each key audit matter in the report unless in extremely rare circumstances, because now you have to make one choice now. How do you consider your professional evaluation? Should you disclose this or not? High tax dispute. They are telling, look, Baba, other things you dispute. Other impairment you tell, obsolete inventory tell, but tax dispute you don't tell, because it's going to create a bad publicity. Tomorrow, our business may go down because of this. Now you have to talk primarily. First you talk how do you identify the key audit matter, and now you talk about cases where in extreme situations how do you decide not to communicate. Okay, so the determination not to communicate takes into account certain related matters, circumstances, facts and circumstances. Communication with the management entity helps to understand the management's views. So that's the reason, students, they always say that key audit matter has to be communicated with the TCWG first, because you can get their perspective. Otherwise, you end up telling something and it can cause some problem to the organization. Then there's a big problem. Okay, next, which question came in November? JPP associates have been appointed ISO certified listed Indian multinational jewelry company having headquarters in Mumbai. Okay, ABC Limited. Company has got more than 100 showrooms and 60 showrooms across the globe. During the course, from the matters communicated with the TCWG, auditor decided certain matters most significant to the auditor's financial statement. Yes. What is this? This is the definition of key audit matter. So they may not tell you it is key audit matter. They can use the word called a significant auditor attention, or they can tell you that matters most significant in audit. So these are the keywords for you need to identify with the like money laundering, against which enforcement directorate has the stringent provisions under under PMLA Act. Now, the public disclosure of this specific matter by the auditor is not precluded by the authority under PMLA. That means your law has not prohibited you. They say that if it is there, you write, no problem. Since the same may not prejudice the investigation, they say that for us nothing. Okay. In fact, we will come to the news now more. Everything like media will also start monitoring. So PMLA Act has not prohibited you from communicating the investigation as a key audit matter, which has been already officially completed and settled. What would be your consideration in determining the matter required significant attention in forming the audit? See, significant attention, key audit matter. State the introductory language that JP should have while communicating such matter in the report as per the standards. See, 1 mark for telling the standard name. Then to tell, they asked you what all the consideration in determining, maybe 1 or 2 marks for this. Is it a key audit matter? Yes, it is a key audit matter. Now, they are not talking about the extremely rare case you should deal because management didn't disclose. If you want, you can write about that also, that there is no restriction by the what is it called law. I can give. And what is your introductory language? Already we have seen that the key audit matters are those matters, and these matters are addressed in the context of financial statement as a whole. So that means this you can ignore. This question has already come for the exam. You can forget this particular question. Which one? The introductory language. See, they have highlighted this introductory language in a box. Forget it. They will not ask you. Okay, now communication to the TCWG highlighted as important. Vallabh Sundar is the auditor of a private sector bank. IT systems and controls is under his consideration to be reported as key audit matter. Clean, straightforward, due to high level of automation and complexity. See, this answers, no, you can use to answer the first one, that EQCR and engagement partner conversation. At what time he should communicate such identified key audit matter? What are the relevant consideration in this regard? Okay, so importance of communication. What are the consideration in this regard regarding the usefulness? What is your usefulness? The purpose. SA 260 requires communicating TCWG on a timely basis. When should you communicate? Timely basis. The appropriate timing will vary depending upon the circumstance. He can communicate the preliminary views of the key audit matter when discussing in the planned scope and timing. Okay, and later he can communicate as he is going to find it. Doing so can help to alleviate the practical challenges of attempting to have robust two-way dialogue. Okay, now why it is important? Communication of key audit matter is important because it helps to obtain further clarification. Now, why it is important? From the TCWG perspective. In the study material, they have not discussed it. They have discussed the importance of the purpose of CAM from the investor's perspective. They will help bring the transparency. For whom? Investors. They will help to understand the auditor's judgment. They will help to understand the management judgment. So this is the purpose of CAM from the investor's point of view. What is the purpose of communicating CAM to TCWG? Have they told you the answer? No. But if in the answer key, they have told you. That's why I marked it as a priority, because this answer key is not there in the study material. How it's going to help TCWG? It will help them to get the further clarification. Like tax audit related, tax dispute related. Are you going to publish? No. You publish other. It gave an opportunity for them to get a clarification. The auditor may provide the draft of the auditor's report to facilitate the discussion with an opportunity to understand how these will be described. It recognizes their important role in overseeing how these matters will be described in the auditor's report. Okay, the opportunity to understand and the basis of the decision. Do they want to do? How it is going to help it also enables the TCWG to consider whether the new or enhanced disclosure has to be given in the audit report. Sorry, in the note, in the financial statement. Otherwise, it should not happen that they have given some half of the information. Now, when the auditor comes and tells that, sir, this is my key audit matter, you get a better perspective. You may decide to give enhanced disclosure so that users can understand it better. In such communication addresses extreme rare circumstances that auditor should not be disclosed or key audit matter should not be disclosed, like that tax dispute case. Such communication provides the auditor with an opportunity for further discussion with those people who are familiar. So this discussion is going to helpful for TCWG also for this reason, for auditor also for this reason. So be careful with this question. Okay, so that's why don't get confused with the purpose of CAM. Okay, the next question, okay, which they have asked in your test your knowledge 16, the last question here. You see the way they have asked. While conducting the audit of CGX listed company, Srishti noted that the company has extinguished the following material liabilities unilaterally without entering into settlement with the creditor, and reported these amounts as gain under the other income. Okay, they have what is that called? They have extinguished the following material liabilities unilaterally because they have closed it. The liabilities for purchase of raw material were written back. That means they didn't even consent with the creditor. Some amount was lying in the account, maybe sometime. Now what happened? No, it may be under a dispute. And what these people have done, they have passed one journal entry, creditor's account debit to other income. They said this we need not pay to the creditors only, and unilaterally they have done. They have no communication with the creditors. Liability for purchase of raw materials were written back due to poor quality raw material and difference in the rates, 3.5 crore. Arey Baba, you please talk to the creditor. No, how can you unilaterally say that no, I need not pay? Liabilities for capital goods were written back on account of defects, 2 crores. The management is of opinion due to they are no longer payable. Therefore, retaining these liabilities will lead to overstatement of liability. See, they are talking from their perspective. Extinguishment of liability was made in accordance with the normal trade practices. This is what we do. Outstanding were written back, stopping dealing with such creditors, and we don't deal also with them. She wanted to send the external confirmation request. However, management informed that sending such request may be used by the creditor as a proof of existence of liability. This is too much. Now, she is contemplating inclusion of such matters as a key audit matter. Can she do it? Analyze the situation. Answer is absolutely no. Why? Because see, unilaterally they have done this and there is no basis for this. How an auditor can accept? Auditor should say, no, you should not do it. Otherwise, you permit me to do that external confirmation. That also you are not permitting me. So there is a limitation on scope. I can say I didn't get any evidence only that this is not payable. How I can decide? So auditor should have given qualified opinion. So you cannot shift your responsibility by giving them as a key audit matter. Okay, key audit matter you came to know, but which is that you are going to tell here? From the context you need to understand. That's why, okay, you can mark it as a priority one. That if from the context you need to understand that we have to talk that it is not a substitute for your modification. So liability is a present obligation. So you will talk about what is the liability. The company has written back the liability unilaterally. It cannot happen. The external confirmation should have been permitted. It would have given better evidence. The reason advanced by the management doesn't seem to be reasonable. So you have to reassess the risk, perform alternative audit procedure, check the implication. And if the auditor concludes based on the evidence, you may have to give the, okay, they told you have to give a modified opinion. So she has to issue a modified opinion. So first of all, they said the analyze. So there are primarily two issues. What you are supposed to do? You are supposed to give modified opinion. So they systematically placed that argument in front of you. So first they told what is liability. Now, how can you write a liability? Then how do you get that evidence? If you want to write back, what you should do? Did you get this? No. So what you are supposed to do, since it is material but not pervasive, you should issue modified opinion. Now, keeping in above, key audit matter is not a proper, okay, because key audit matter is not a substitute. Auditor shall not communicate the matter as a key audit matter, but instead he has to modify because it is not a key audit substitute for the expressing modified opinion. So maybe 1 mark. That's why students, please practice this question. Seems to be very important question. 1 mark for this particular telling that it is not a substitute, but majority of the at least 3 to 4 marks should go for telling, analyzing that you have to issue a modified opinion. Okay, so I can bring this as a SA 705 question also. But anyhow, they have given, yeah, because this chapter number test your knowledge 16. So they will not specifically tell whether should I place it under CAM or should I place under 705 modification. So we can treat it like a modification question also. Because CAM is very insignificant, only one line they spoke. It is not substitute. So I cannot expect to get 4 marks to write those points and 1 mark to write this. So please practice the way they have given in the study material. Yes, students, with this we are done with the CAM. I hope you are clear. We will continue tomorrow.